Yo, what's going on, ladies and gentlemen? So tonight's video is going to be based on an understanding of how the market maker traps traders. Hopefully by the end of this video, guys, you'll have a better understanding of when to anticipate a potential trap is in the process. Now listen, guys. This is going to be diving into the hybrid system in a little bit more of a complex way. But you know what? You're here now. So I best just give it to you right now so that when you do come to the live streams, you're going to have a bit of a better understanding on when I'm shouting and screaming at you guys in the live stream, talking about particular zones in the chart with the understanding that something is going to happen. So let's roll with it. Earlier on today, ladies and gentlemen, we were anticipating that Bitcoin was going to do something in a particular zone. So check this out. In the live stream today, we were talking about the Bookmap. And I had stated during that live stream that there was a particular zone right here where the interest of traders who had placed orders inside of these zones but didn't get filled would be the deciding factor as to whether or not there was going to be the same interest coming back in at these areas. Now you can see this is an orange area right here, which shows that this was liquidity that came into the order book by means of it being placed over here on the right. Stay with me. The understanding of the Bookmap is this. You are trying to establish the relationship between those who are prepared to buy and sell. It's an auction place. And utilizing the understanding of areas like this with orders that have been placed or cancelled or filled. See, these were orders that were cancelled. You can see that because price didn't go towards these zones. Okay? Wherever the bubbles are is where the orders are filled. Now, the idea during the live stream was that Bitcoin, if it was to come down lower and not have the interest of traders coming in at these zones, then we would anticipate Bitcoin to collapse and break the range lower. That's not what happened. Check this out. So this part of the video is going to be bringing it back to the live stream, which I did earlier on today. Stay with me on this one, guys, because it may be a little bit too much for your understanding of the hybrid system if you are new, but just stay with the story. Check this out. Okay? Here we go. What do we see? We see a bag of liquidity down here, ladies and gentlemen. Let's bring up a bigger time frame. Look what's going on here. You can see down below, we have got ourselves this cluster of delta appearing at the lows. 2,457 Bitcoin was picked up at the downside move inside of this range at 22,600. Okay, that is huge. This area is showing that there is interest from traders inside of this zone. Whether those orders were filled or not is a different story, but the commitment shows that they placed orders here and then they cancelled it. This is very important because if they actually release lower inside of this zone, Bitcoin is going to take a nosedive lower. Why? Because this is where you would anticipate interest to come in to move Bitcoin back up. Okay then. So we have the understanding of an area in the Bookmap that shows us where traders were residing. Now check this out. So moving forward on this video part of the live stream, we talk about what's going on down here. This is all building up to the story of Bitcoin reversing. Here we go. Right here, we've had two hits. Liquidity is present inside this zone. This is what we want to see. We want to see traders coming in, placing orders here to get filled. All right. And if the market doesn't move towards that, then they're going to start coming up to this area, 23,500, which is 634 Bitcoin to the top side of the range, which would then be a clean break above the VWAP itself, retrace continuation. These are zones that you want to pay attention to if you're using the Bookmap, because they are areas where traders had placed orders in the Bookmap and they cancelled them because they didn't think they were going to get filled. If price starts making its way towards that zone, then principle, we would understand that traders who placed orders here are going to step back into the chart. And that's how we're able to determine the strength of a move. There's a lot of commitment down here. And if they release beyond this zone, Bitcoin will collapse to the downside and start working towards that 20K range. But if they can hold this point right here, ladies and gentlemen, through the structure of the basis of the delta down here, a W formation, trading below the VWAP itself, looking like it wants to make its way towards that zone, then happy days. We would understand the basis of commitment from traders inside of this zone right here. Okay then. So let's flip over to the Bookmap itself and have a look at what had actually happened. There you go. 23,500. Let's just bring that back up. 23,500. That obligation was fulfilled right there. Just look at the top right here. Happy days. What do we understand? Let's just pay attention to the Bookmap now. Because what we're doing right now is we're building the structure behind how Mr. Market Maker traps the trader. Yeah? This was the trap, but could we be of the understanding that we kind of thought that if Bitcoin was going to hold this point, it would reverse higher? What things do you need to take into consideration on the idea that they were going to reverse? Look at the cluster of orders down here. Traders were setting orders inside of this zone, but they were canceling them. The delta come in shows 2,283. Look at the delta again, 1,149, even lower, 559. When the delta is negative and it's marking price lower, Mr. Market Maker is aggressively hitting the bids. In order to aggressively hit the bids, he is giving the illusion that price is going to drop. That's the first trap. Then the fulfillment of the trap is to simply reverse price back up and move aggressively, where we would anticipate the rise, the retrace into the VWAP, and then the continuation back up. No, we did not hit that 23,500 zone. Or did we? Did we hit the 23,500? Bear with me. Did we hit 23,500? Barely. No, not even. We didn't even hit it. False call. But we had an understanding of what was going on here, ladies and gentlemen. We anticipated that a W formation was going to form down at this area right here. Okay, if you remember. But they broke down lower. That's the truth. That's the way the market operates. But we were expecting the reversal back up. Thursday, midweek reversal. They come back into the daily open. They hadn't tested the daily open all day. But we had an understanding of the way that the market maker could have been potentially setting up price to move higher. Was Bitcoin last to move? That's the question. Let's take a look at the dollar index for a split second. Look at the trickery of Mr. Market Maker right here. Allow me to show you. Just remember, go to the dollar index. When you search for it, press capital.com so you can see the vector candles. Now check this out. I shared a video to the patrons of the channel, and it was just after the New York live stream. And it was talking about the idea that this move right here by dollar index itself was going to come and fulfill the obligation of the green vector candles. Now, what I addressed was the idea that they would come back up, hit this zone, and then reverse back down. They took their time, but check the video out. Here we go. So here's the video. So if they can hold this, move up, retrace from this zone right here, then we would understand that they are currently now trying to trap traders. Okay, that's the basis of this move. But it's Bitcoin inside of this area here. So the conversation that I was having in that video pretty much explains the idea that they were going to bring price back up to trap the trader on the strength of the dollar itself. But what is it that you need to take into consideration? It's the way that they move price at speed that's going to get you to understand that a trap is present. Look at how fast and how much ground they had covered on this move to the upside. That's the first clue. Now look, you can see price had dropped down lower here, all right? But then straight away, they shifted back up. This is the trap. Whenever you see a move like this, you can pretty much bet on the idea that the vector candle will be realized, if not in the same session, but later on, but sooner. Okay, so if it's not going to retrace it straight away like they did with this sort of play right here on the red vector candle, at some point they're going to retrace it. So you can anticipate trades. You can anticipate the idea of the trap appearing up here. How were we to understand the trap? Because it was up here that most of the interest came in from the retail trader. Mr. Market Maker does not encourage traders to go short from the highest point. He encourages them to go short from the lowest point, which is where you see this move right here. Then he gives them the belief that the strength is in the dollar index itself, and they move price all the way up and trap the traders inside of these zones right here. Then this is the drop, the retrace, find the proof of the move, continuation to the downside. Let's go over to Euro USD. Funny story, eh? Let's break down Euro USD to understand the trap. So here is the story of Euro USD, where we dive into the idea of, if you want to pick up something, do you pick it up cheaper or at a higher price? This is the example of the trap. Check this out. Now, with the title of the video, or should I say the thumbnail, will Bitcoin move last? This is the question. Look at the Euro USD. Phenomenal. Stop, hunt, rise, drop. What do you think New York wants to do? This is the question. Ask yourself the question. If you are going to try and pick something up cheaper, would you want it at the highest point or would you want it at the lowest point? Would it be consistent to assume that we can anticipate that during New York, we are likely to see a retrace back into the imbalance of this chart? Because right now, the big green vector candles and the blue vector candle was an imbalance. They have filled that imbalance. There is now another imbalance in the chart right here. The hybrid system says, principally, that they should be bringing price back up into this zone. We are now in the US brink session itself. You can see Bitcoin right now is... You flip back to the Euro USD chart, ladies and gentlemen, you can see bright as day that they are now working the recovery back of the vector candle. Violet vectors right there, ladies and gentlemen. So the question on your minds is this. Was it luck? Did we project correctly? The projection is not what I'm interested in. It's the understanding of the manipulative play. Stop, hunt, rise, drop. They are exchanging hands inside of these zones at aggressive natures. Fast fills with orders, moving price quickly because they managed to grab interest. Retail traders going long. How unfortunate it is for the trader who went long at this point. He pays the price. Yesterday's high gets taken. They instantly reject the zone and bring it all the way back down and level the playing field back into the range. The 50 EMA was, look at it, spiky. You never see a spiky 50 EMA. What is that? That tells you it's an imbalance. That tells you it was a trap. There were orders wanting to get filled on the move back up for Euro USD because Euro has been trading way beyond parity and it's now trying to make a recovery back up. But typical market maker behavior, he ain't going to pay premium. You guys are. Hopefully, with the understanding of the hybrid system, you ain't going to be those guys. You're going to be the guys that are running shorts at the highest possible point. I know that you buy something of value, you're going to want to sell it cheaper. Sorry. You're going to want to sell it at a higher price. Man, nice little boomer moment for you there, ladies and gentlemen. Please say in the comment section that I experienced the boomer. Jokes aside, ladies and gentlemen, if we recall the understanding of the recovery of vectors, the stop hunts, these are the things that we look for because the stop hunt effectively establishes the true the true motive behind what the market maker is looking to do. Rolling back with Bitcoin, you can see now that it's now making its way back up. The daily open has been successfully tried. Happy days. Vector candle principle is leading price back up. What's next for Bitcoin? Well, I'll tell you what's next for Bitcoin. Bitcoin will move last. We are coming in towards the close right now. I believe New York is actually closed. Bitcoin is now moving back up. It's maintaining its stance. Asia tonight will prove the proof of the move, ladies and gentlemen. Why? Because if we take a look at what's going on across the board, oil takes a nosedive lower. trying to hold out inside this zone. Dollar index itself is making its way all the way back down to recover these vector candles. Right there. There it is. 2 seconds. Happy days. Now, this red vector candle right here, if you pay attention to it, has been nearly recovered, and you've got an imbalance right here. Okay? So that could be a zone that we need to be aware of. In other words, if the dollar index decides to retrace back up into this zone, we would anticipate the dollar index to repeat the same sort of narrative to start working its way down lower. So in other words, Bitcoin, if it's going to follow the idea of the dollar index itself, on the retraces of the dollar index, Bitcoin will be retracing down. That's what we want to see. We want to see Bitcoin retrace lower. Look left. Welcome to vector recovery. Okay? Look at the beauty of what's going on here. Vectors are being recovered. There's not that much ground left for the vector to be recovered down here. There's not much inside. This candle's been fully recovered at the point of control for the session. Happy days. Bitcoin shifting out. On our way towards that 23,500 zone that we want to see Bitcoin resolve at. Rolling over to the NASDAQ and the S&P. Zoom out. Where do you think S&P's going? 4,000, baby. We anticipated that 4,000 stop hunt low, shift out, stopping volume candle right there. Are you getting it, guys? For those of you who have been with me for quite some time will come to understand that I repeat myself all the time, but the business model does not change. All we've got to try and do is work out where we are when we come to the trading, when we come to the charts, and try and understand the environment of what's going on. Yeah? Ladies and gentlemen, if you are new to the channel, be sure to like and subscribe so you can get into more understanding of how the hybrid system operates. To all my pattern watchers out there, I've got nothing but love for you all. Don't let the market maker trap you. And the sad truth about it is, this game is a zero-sum game. One man's fun is another's hell. That's Metallica, man. So, if you had a successful day today, happy days. Tomorrow is Friday. We know what Friday's about. Friday can lead to a profit-taking day, or it can lead to a consolidation day, where they prepare for the weekend. Hopefully, if Bitcoin is feeling up to it, we would see the recovery of the red vector candle inside of this zone right here. Apply the same principles. And I will check in with you all tomorrow. Mad love and respect. Peace.